Hey, how you doing, guys? It's Austin, and in today's video, I really want to cover something that I believe is probably the most important aspect of trading once you get past that stage of being able to recognize patterns and read indicators. All that stuff is really basic. It's something that, yes, it does take time in order to learn how to do it correctly, but once you got it, you got it. The one thing that requires constant work and might never be 100% is emotional management. We always talk about risk management and risk rewards, but we never talk about emotional management. How we feel when we lose a trade, when we win a trade, and while we're in a trade. And to me, that's probably the most important thing because that affects our trades going forward. And if you are making rash decisions based on a loss that you just incurred, that can lead to further loss, which continues that cycle and perhaps make it even worse. So let me paint a picture. Let's say you take a breakout trade. Let's look at this current pattern right here. Let's say you take a breakout trade on the ascending triangle. You get a good entry, you get a good stop loss, and you're in profit. But you start to recognize that this trade's slowing down. There's something keeping it held back. What do you do? Do you stick through it? Do you hold your stop loss and hope that it continues upwards? Because you have the target in place, it's just a matter of time until it gets there, right? Not all the time, but for me, more often than not, I'm willing to hold my stop loss and ride it out. In certain situations like this, yes, it does suck because you spent so much time in this trade for pretty much nothing. And it's especially those situations where somebody can really feel the effects of a loss. And on my channel, I like to promote good risk management in terms of making sure that when you do lose, it's not your entire account, but rather 1, maybe 2% at max. And typically, what I'm finding out is that even though on paper, 1% to 2% is pretty much negligible in terms of your entire portfolio, I'm finding that many people are getting angsty. Their emotions are starting to get riled up. Whether it's one loss or two or three, they start to second guess themselves even more and they start looking for ways to make that money back as quick as possible. Whether it's cranking your leverage up, uh, but not in the safe way that we promote on the channel, or simply not waiting for the next best trade, but rather what is the next trade I can get myself into? And it doesn't even have to be necessarily a excellent trade. It can just be a trade. And if you find yourself in that type of situation where even if it's a small loss in terms of percentage, it's still affecting you emotionally, you need to take a step back. And the first thing that can really help is time. If you can increase your time in the market, especially if you're just starting out, that will substantially increase the emotions in terms of negating them, and as well also helping in other aspects such as being able to spot divergences and patterns ahead of time before a major breakout or anything occurs. But let's say you continuously fall into the trap of revenge trading and you're exhausting your account in record time. Therefore, your time in the market dwindles and it dwindles fast. So, my first recommendation would be drop back the percentage that you're willing to lose inside of a trade. Now, at first, you're not going to like it. Nobody likes making less money. But the light at the end of the tunnel is you're building a callus where you can take a loss and it doesn't affect you emotionally, where it impairs your judgment on the next trade. So do that for a while, see how it makes you trade better. And then once you get your confidence back, go ahead, go back to the original and continue moving forward. Next step would be just think about the next couple of trades. If you theorize yourself getting stopped out ahead of time, try to negate the effects of the emotions by not waiting until the last second to try to look for a better trade. So let's take this example right here. When we were up here, I would say right about this point right here, I was looking at the potential of this actually barting down to the downside. Now we are still kind of at the diagonal support, but it does have a very high chance of actually breaking through. So what I begun to do was look for the next trade that would set me far into profit and allow me to take advantage of the risk reward formula that we promote so much. So typically people would say, all right, well, if I lost this trade, the next best thing I could do is get into a short right here and up the leverage as much as I possibly can. And yes, you would make, a good amount of money off of that. But it's not safe. The stop loss really, at that point in time, is it worth it? It would probably be about a 5 or a 6. Let's go ahead and mark that up and see if that's actually true. Let's say you entered right here and you put your stop loss above, probably right here. That would actually be a 2.28. And that's what I'm talking about. If you cannot make a clear headed decision on quality over quantity in your trades, you're risking money that is not worth being risked. So you want to be looking for trades that are worth taking. So think about the opposite effect that this would potentially create. So if we have a sharp bottom here and a sharp top here, and we form a sharp bottom here, that would create a inverse head and shoulders that would give us a target to the upside relatively all the way up here. So that would be the opposing trade to this reaction that we're seeing now. And that trade, even if you give it some breathing room, would still be almost a 13. If you up the take profit just a little bit, it would be a 13. So a 2.28 versus a 13, if you can wait just a little bit longer and get a better entry, the potential is so much higher. And that can help you put into perspective the current loss that you're sitting in right now. That there is a light at the end of the tunnel, and that loss that you just incurred is simply just a blip on the map. It's not really anything. But if you have not gotten past step 1 and step 2, and even the smallest losses can affect you to the point where you can't look further than the absolute next trade and not the absolute next best trade, you really need to work on steps 1 and 2. So that is just simple psychology that I really want to talk about because it's something that I deal with every single day. And it's gotten much better. In the beginning, I literally would fall into these traps of always taking the next trade, trying to make my money back, and that only caused further loss. So please, for the love of God, guys, take your time, think about the situations that you're getting yourself into, and you should be trading much, much better. So hopefully this was a enjoyable video for you guys. I know it's very basic, but typically people don't think about it. They don't notice that they're doing these things. And when you get to the level where, yes, you might still make the same mistakes, but you can quickly recognize them and nip them in the butt, that's when you'll really start seeing the difference because it's not about being a perfectionist, but just being better than the last trade. And eventually, at some point, you will be on top of your game. It's only a matter of time. So I appreciate it, guys. Thank you very much. And I will see you guys soon, I promise. All right, guys. Peace out. Love you. See you next time.